the biggest bond yield decline since Black Monday in 1987. So what on earth is going on right now? And I had to change the video to just get this out because I believe this information is so important. And I have to give credit to my buddy George Gammon because he was the one who spotted this. And I am a long time believer when it comes to cycles. And when you see things like this happen, it generally just isn't a coincidence that that's the case. So let's see exactly what's going on. 2-year treasury yield posts biggest 3-day decline since the aftermath of the 1987 stock crash. The yield has fallen over 100 basis points, so over 1% since Wednesday, making it the largest 3-day decline since October 22, 1987, when the yield fell 117 basis points that followed the October 1987 stock market crash known as Black Monday, in which the S&P 500 plunged 20% in its worst one-day drop. The move was bigger than the 2-year yield slide of 63 basis points that took place following the 9/11 attacks. I mean, wow, just think about that for a second and what they're saying there. The 9/11 attacks, this is bigger than that. So really, this is much bigger than SVB. On the surface level, it might look like it's just troubles with some small banks in the United States, but you have to realize that the global monetary system is interconnected, very much so, country to country, especially in Western countries. And when it comes to the banking systems, we all operate on this reserveless banking system, whether you like it or not. And any of these banks could suffer the same demise of SVB if they're caught at the wrong time in the wrong place. So it's kind of insane. And let's take a look at that 2-year just so we can visualize it on the chart. And you can see it's rallying extremely hard right now. Essentially, what happens when bond market yields go down, it means people are buying bonds, which are pushing the price of the bonds up, which means the yield comes back down. So that's essentially the mechanics of what goes on. It's not just happening in the United States though. It's happening globally, around the world. It's not just in Europe either. It's happening in Canada. It's happening in Japan. It's happening all over the world. Bond markets have gone on an absolute tear. And if you look right here, you can see that the 5-year, over the past 3 days in Canada, which the fixed rate mortgage is based on, has absolutely soared. And I'm talking about the bond. I'm not talking about the yield. So the yield has had like a record decline in 3 days. We haven't seen anything like this since at least 2020. And you know, that just goes to show the kind of risk that is in the system, the global monetary system, not just in the US. So something bigger is going on beneath the surface that we can't see, but we can see these gyrations that are happening in the bond markets, and we know something isn't right. And that's where we hold on to our gold and we can sleep better at night knowing that we hold that, and it has zero counterparty risk when you hold physical gold. I just wouldn't store it at home with rising crime and everything that's going on. Gold is exactly what the state and the governments don't want you to have. They don't want you to be your own bank. They want you to be stuck in their system, which is failing and crumbling right before our eyes right now. We can see it. And talking of gold, gold has just gone on an absolute tear over the past couple of weeks. It really is moving higher, and in some currencies you are probably getting close to the actual all-time highs. In fact, let's take a look right here and see where we are. So yeah, you can see right here that we are getting very, very close to that all-time high when you're talking about gold priced in Canadian dollars. And when you look at gold priced in British pounds as well, you are literally at all-time high when it comes to the British pound. And you know, like I said on the stream last Friday, I wish I took a trade on the back of that. On Friday, I said that the currency was likely to pull back. We can see the loonie is rallying hard today. It's up about 1%. And against currencies like the Mexican peso, it's up like 2-3%, I think, when I last checked. So this is an insane amount of rallying that we are seeing across the board, across bonds, different currencies. It's very, very indicative indicative of what's going on right now, which is the bailouts that are happening, and essentially they're using special purpose vehicles to essentially bail out the system. We know that's what's happening, but it's just kind of crazy when you really think about it. All these yields, the fact that the 2-year yield has posted the biggest 3-day decline since the 1987 stock crash. That does not say something good about what's going on in the economy right now. That does not say this is a great time to go out and buy a house. It says that we are heading into extremely risky waters right now, and this is really just the beginning. And I think things will probably go quiet again after this happens, and likely some other things will happen maybe in Q2, Q3 of this year, and we'll just have more and more events, and they'll eventually stack up to cause a massive meltdown of these systems. Now let's just go over what's happening globally with bond yields so I can actually show you. So Canada's bond yields are down massively. The 2-year down 40 basis points in one day. These are just insane drops. The 10-year yield is down 28 basis points. The 30-year not so much. That yield curve inversion is still very strong. DXY, the dollar index, is down over 1%, and that is probably more signaling the movements between the US and other currencies to buy these bonds and these safe haven assets. The dollar normally rises during times of crisis. When the bailouts actually happen, the opposite happens. The dollar actually usually falls when the Fed comes in and bails out the system. So let's continue and see what they're saying here. So you look at the UK bond market as well, down significantly. The UK 1-year gilt down 35 basis points, 2-year down 35 basis points, 5-year down 31 basis points, 10-year 31, 30-year 20. New Zealand, all the yields are down. Australia, all the yields are down as well. And then we've got the US Treasury bills, and the yields are down massively, 52 basis points for the 1-year, 50 basis points for the 2-year, and so on and so on. So it's kind of insane. And then you've got the loonie down here, which is up 1.05% right now against the US dollar. And we talked about that on Friday. I said it was oversold and due a pullback after it broke that key technical level last week, which is actually bearish long term for the currency pair. It's really, really interesting what's going on, and you really have to monitor this. And the thing is, what's going to happen now with central banks? This is the key question. A lot of people are going to be asking what is going to go on with central banks. Are they going to continue hiking? I don't think so at this point. I don't think the Fed is probably going to hike next week or whenever the meeting is. I don't think that's going to happen. You could even see a surprise. They could just turn around and start cutting rates. But really, I doubt that because of where inflation is right now. But I think you're going to see inflation just kind of back away from being in all the headlines like we've seen it. And that is happening for a reason, because they are getting ready to prime and bail out the system once again and inflate things even more. And you have to realize these central planners, they do not care about us. They don't care about what we think is right or what we think is good. They're just going to bail out the system at whatever costs and inflate things even more for the top 10% and the top 1%. But the question is really going to then become, where is inflation going to go and what is going to happen afterwards? And that really becomes the big question. And I guess we're going to find this out over the next couple of years. And I really think this is just the end of the system. The system is crumbling right before our eyes. They're going to try and do everything they possibly can to save it. This is only 3 years after they bailed out the system in 2020. So, you know, in 2025, are we going to have a massive crisis again? You just have to look at what's happened to realize that these cycles are getting shorter and the busts are getting much larger. So anyway, if you have enjoyed this video, you may like this video here. You might also like that video there, video on gold. I think it's incredibly important to watch it right now. Gold could go down massively if there's a stock market crash. That's something to bear in mind, but it's absolutely on fire, ripping higher today. I will see you in the next video. Thank you so much for watching. Take care.